The Paul Revere Insurance Group is North America's largest individual disability income insurer. With assets of over $5 billion, Paul Revere promotes the financial security of more than 1 million policyholders. Every day throughout the United States and Canada, the Paul Revere sales team markets a wide range of financial services products. These include annuities, life insurance, short-term and long-term disability, and Paul Revere's premier product, individual non-cancelable disability income insurance. In the home office, the sales process is completed by underwriters, actuaries, customer service teams, and many other dedicated personnel. More than 3,000 strong, Paul Revere is a wide network of talented men and women, all working together to bring greater financial security to an ever-widening circle of policyholders. But Paul Revere was not always so strong. In the beginning, there were only 3 men with the will to turn a dream into reality. In 1895, Worcester, Massachusetts was a thriving manufacturing city. It boasted a rapidly growing population and hundreds of factories that sent products to every corner of the globe. It was in the Knowles building on Worcester's Main Street that 3 local businessmen joined together to start a new venture. They were James E. Farwell, a fraternal insurance representative, Frank M. Heath, a successful paint merchant, and Francis A. Harrington, a livery and carriage shop owner and former Worcester mayor. All were members of the Masonic fraternity. Their plan was to form a company to sell accident and sickness insurance exclusively to fellow Masons. Many other fraternal organizations sold insurance to members, so many, in fact, that by the late 1800s there was actually more fraternal than commercial insurance in force. But the Masons, with more than 1 million members nationwide, remained an untapped market. This fraternal organization provided prominent businessmen an important communications network in an era that depended on face-to-face contact for most interpersonal affairs. The Masons taught a code of ethics based on industry, loyalty, and honesty. These were values that Harrington, Heath, and Farwell incorporated in their new company, which they named the Masonic Protective Association. It later became known as the MPA. Farwell became secretary and general manager, Heath treasurer, and Harrington president. Policies were sold through Masonic lodges by Masons to fellow Masons. For an application fee of $5 and premium payments of $12 a year, a policyholder could receive accident benefits of from $25 to $2.50 per week, depending on the risk associated with the occupation. The policy also provided a flat death benefit of $100. Of course, there were applicants who were not eligible for coverage. These included balloon operators, professional baseball players, and bicycle racers. By the end of its 4th year in business, MPA policyholders had grown to more than 8,600. One big reason for the company's success was its efficient handling of claims. The home office staff could be counted on to process claims quickly and correctly. One of the MPA's earliest and most successful marketing tools was the policyholder identification badge that was issued with each policy. Designed and patented by James Farwell, the badge was designed to be worn on the owner's suspenders. It carried the message, "I am a member of the MPA. They will care for me if I am sick, injured, or in trouble." This simple marketing piece was so successful that it continued to be issued by the company for well over 80 years. Rapid growth was accompanied by unexpected challenges to the MPA. One of the most severe came in 1917.
Francis Harrington is president, and Melville Heath is vice president and general manager. Francis's 2 sons, Charles and Frank, are running the home office operations, and Melville's 2 younger brothers, Austin and Vonley, are running the sales organization. Although the 2 families share the company's fortunes equally, the Heaths believe that the sales organization is much more important and they should have a bigger piece of the pie. So in 1917, the Heaths secretly formed a new insurance company called the National Protective Insurance Company. Like the MPA, business is limited to members of the Masonic Lodge. By offering higher commissions, they were able to convince many of the MPA agents to transfer MPA policies to NPI. In other cases, they would tell the MPA policyholders that the company has changed its name, or that a new company had been formed by the same people, but with a better product. In early 1918, the Heaths announced to the Harringtons that they wanted to sever their business relationships. At the time, the Harringtons knew that the Heaths were going to form a new insurance company, but they weren't aware that the MPI was already in force. They were also not aware of the defection of many of the former MPA agents, or that the transfer of many MPA policies had already taken place. In fact, it wasn't until the end of 1918 that the Harringtons realized that of over 4,000 policies written by MPI, nearly two-thirds were former MPA policyholders. As a result of this, the MPA brought suit against the Heaths. In a landmark case decided here in Massachusetts, the Harringtons were granted sole ownership of MPA, and the Heaths were ordered to pay considerable restitution.
The Harringtons were assisted in their fight to keep the MPA by a new member of their management team, W.C. Johnson. Johnson was a genius of the insurance business. He joined the MPA as a vice president in 1917 and devoted the rest of his working life to building the company into the preeminent disability insurer in the business. By 1922, the MPA had outgrown its rented offices. The company built new headquarters at 18 Chestnut Street in Worcester, and for the first time occupied a building that was completely its own. The year brought two other significant changes. One was a change of name from the Masonic Protective Association to the Massachusetts Protective Association. The other was the death of Francis Harrington. Upon his death, his son, Charles, became the MPA's second president. Under the guidance of Charles Harrington, his brother Frank, Lemuel Hodgkins, and W.C. Johnson, the MPA prepared to expand into the general population. In 1930, the management team created a new company that would operate side by side with the MPA. The MPA would continue to sell disability and life insurance exclusively to Masons, and the new company would sell those products exclusively to the rest of the population. It was W.C. Johnson who suggested the name Paul Revere for the new company, based on the fact that Paul Revere the Patriot had been a loyal Mason and a Grand Master of the Grand Lodge of Massachusetts, the most prominent Masonic position in the state.
It was a very successful operation despite the fact that its business was limited to members of the Masonic fraternity. Well, it was obvious that the benefits enjoyed by the policyholders of Massachusetts Protective were the envy of many people who were interested in insurance.
The MPA and Paul Revere continued to expand across the nation thanks to home office leadership and a dynamic sales force. Annual sales conferences kept the sales team informed and competitive. Sales greats like Jim Stanley routinely set and broke sales records. Growth in the home office kept pace. Additions were made to the main building 6 times between 1924 and 1989. In Worcester, the MPA established a reputation for being the best place in town to work.
In 1939, when I arrived, I soon discovered that everyone had an exceptional feeling of pride about working at the MPA and for the Harrington family, and it didn't take me long to acquire it myself. I really enjoyed working in what they called then the legal department. In a couple of years, I was promoted downstairs to the executive offices as secretary to the treasurer, Mr. Frank C. Harrington. And you would think that I went down to plush offices or something, but that wasn't the case at all in those days. They had brown battleship linoleum on the floors, and no paintings, no drapes. It was just bare bones. Many of us went to the old Esca cafeteria, which was on the second floor of the old Worcester 5-cent savings bank. And of course, many of us went to the lovely department stores that were along Main Street at that time. Barnard's, McGinnis's, Denholm's. But you had to walk pretty fast to get to Denholm's, do your errands, and get back in time to punch the time clock. And by not being absent or tardy or not forgetting to punch the old time clock, you earned an honor day for every 3 months of perfect attendance. So you were pretty careful not to stay downtown too long. Then a matter of telephones. Only supervisors had telephones, and it was considered a badge of importance. If you married when I first went there, then you didn't work there anymore. But that changed rather quickly. And in fact, I think maybe I was the first girl permitted to be married and retain my position there. Seems like very peculiar rules, but that was the way they operated in those days. Those were, I'm sure, what they must call the good old days. We didn't realize it at the time, but we had fun. And everyone felt like a big family. You knew everyone in the company. I think when I first went there must not have been even 200 people. Well, it was small. But you knew everyone and cared about everyone. And you knew that the Harringtons cared about you. And it was truly the most wonderful place in town to work, and everyone felt that way, so they stayed there. And I wound up staying 42 years.
In 1945, Charles Harrington retired, turning the presidency over to his nephew, Frank L. Harrington Sr. His core management team included Joe Mulder as vice president and secretary, and Orville Graham as head legal counsel. This team led the company through a period of remarkable changes.
In the late 40s, obviously, it was post-World War II. And everybody was interested in growth. Everybody was interested in expanding activities. And insurance companies were involved in that too. We felt that there were other fields that we should explore. Group insurance was one. The brokerage business was another one. And I happened to be involved directly in the development of the brokerage business. We had been hesitant to accept business from agents of other insurance companies. But then it became evident that there was a segment of the insurance sales force, nationwide that is, the agents of many companies whose company did not offer the high-class quality of health insurance that Paul Revere did, wanted to sell it somehow. Well, we realized that if we approached it in a diplomatic and tactful way, that we could provide brokerage services. And that's how it started. It was a logical step for us to go into Canada. We debated a little about taking a company called Paul Revere into an English, what had been an English colony, but it turned out all right.
The dramatic growth of Paul Revere was in contrast to the slow but steady decline of MPA sales. Societal changes had gradually reduced membership in the Masonic fraternity. By 1966, company management determined that it was no longer feasible to operate both companies. Paul Revere, the child of the MPA, assumed all of its assets and liabilities. The Massachusetts Protective Association was officially retired. Another dramatic change was just around the corner. For in 1967, Paul Revere joined the Avco Corporation in a reverse merger that made headlines in the financial world. The silent partner, Paul Revere, actually ended up owning over half of Avco as a result of the multi-million-dollar agreement. Under the leadership of Frank L. Harrington Jr., who became president in 1966, his uncle Robert D. Harrington, and Paul Revere Vice President John D. Gosnell, Paul Revere embarked upon a diversified investment program.
We had some very able people in our legal department. We were able to get the Massachusetts Protective Association reconstituted as a holding company, and we named it the Paul Revere Corporation. And it owned Paul Revere Life, it owned the Paul Revere Variable Annuity Insurance Company, and then a lot of subsidiaries, some of which were in the real estate business and investment management and on and on. Well, over time, those were shaken out or shaken down, and the Paul Revere Corp wound up with its major holding as the Paul Revere Life Insurance Company. Around 1967, when Paul Revere and Avco Corporation blended together. It was not a merger. A lot of people think it was, but it wasn't. It was, the two corporations simply exchanged stock. Each one had stock of the other one in its treasury. And because Paul Revere Corporation was the holding company, the amalgamation was brought out by that.
The company selected an insurance executive from the Aetna companies as its first non-Harrington president. George Hogeman provided the leadership needed as the company returned to basics and devoted its resources solely to insurance and other financial products. In 1974, George Hogeman accepted the position of president of Avco, and Aubrey K. Reed Jr. was elected Paul Revere's sixth president. A longtime sales leader with the company, Aubrey was committed to maintaining and building Paul Revere's sales organization.
Sales were and always will be the lifeblood of the company. Without sales, you just don't have a business. One of the most significant things that occurred during my tenure as president was the formulation of the national sales agreements. This allows a sales rep to write with other companies to write products of ours. In 1983, we signed our first national sales account with the Prudential. 10 years later, over 50% of our disability business was coming from these type of agreements.
In 1985, Textron Inc. acquired the Avco Corporation, and with it, Paul Revere. The new parent company offered financial support while allowing Paul Revere to continue to operate with almost complete autonomy. Aubrey Reed retired at the end of 1990 and was succeeded by Executive Vice President Charles E. Soule. Chuck had been instrumental in developing the company's quality process in the 1980s. As president, he continued to focus employees on quality and service. At the same time, he steered the company through many challenges.
The disability business is a constantly changing one. Our business today is quite a bit different than it was 100 years ago. Different in product, in markets, in distribution. And one of the things we've done well as a company is managing through change. Since we're insuring people's income, their motivation, their work ethic, and their stability, and changes in that in our society have a major impact on our business. And that's really what drives change. But when I look back at the last 100 years, there are some very real constants that I think set Paul Revere apart as a company from other companies. We've always been proud of the quality of the disability product we've given to our policyholders. We've been proud of the way in which we work with and treat our employees. We've been proud of the support that we as a company and our employees have given to our communities. That's really defined our company's personality, and as we move ahead into the next century, the next millennium, I see those forces as real constants. I look forward to a time when Paul Revere can continue to support the business community, its policyholders, and our shareholders.
The Paul Revere family is proud of its strong heritage and is prepared to lead the individual disability income industry into the next millennium.